As per the most recent GDP report, the United States is now technically and officially in a recession. In today's video, I'm going to give my opinions on what I think this means for crypto and what we can expect going forward, and exactly what you can be doing as an investor to take advantage of anything that is to come from this news. As we can see here, the gross domestic product report came in at a negative 0.9% for the second quarter of 2022, following a 1.6% decline in the first quarter. Of course, the Dow Jones estimate was for a gain of 0.3%. Now, something I'm seeing in a common narrative amongst websites, at least, is that, well, we were expecting to see at least a little bit of gain in the GDP, and not anyone that I meet, none of my colleagues or people that I work with thought that we were going to see gains here. The majority and the consensus of people did believe that we would see a negative report, especially with the sugarcoating that we have been seeing, especially from the White House and other governmental bodies. Now, the technical definition of what a recession is. A recession is a significant, widespread, and prolonged downturn in economic activity. Because recessions often last 6 months or more, one popular rule of thumb is that 2 consecutive quarters of decline in a country's gross domestic product constitutes a recession. What this means is that if we start to see 2 quarters, which is a course of 3 months, so 6 months total, of the overall growth of the economy slowing down and going negative, then that is considered a recession. So although we're seeing people say, well, we're not really in a recession, just technically in a recession. We're just technically in a recession. Let's just call it what it is. We're in a recession, okay? Now, does this mean that it is a terrible recession? No, not yet. Does it mean that it is, an absolutely amazing recession? No, but by technical definition, that's what it is. Now, we are starting to see that although we are in a technical recession based off of, again, 2 quarters of negative GDP growth, that many governmental bodies are saying, well, not really. And I do believe that the market's actually not going to react very bad to this news at all. One thing I mean is that if we look at something like Politico, we have been seeing a lot of sugarcoating and a lot of dismissal of this news. We can see here that Politico came out, said tomorrow we get the first and possibly inaccurate and certain to be revised reading of U.S. economic performance in the second quarter of this deeply weird economic year, one metric to measure if we're in a recession. The White House even came out just a couple days ago. It says that White House officials have been increasingly trying to combat the narrative that the United States is on the brink of recession as they look to get out of ahead of grim economic data expected Thursday. So, a lot of different governmental bodies, again, have been saying that although we are technically in a recession, we're not really in a recession, so don't worry about it being a recession. Now, why are they doing this, right? I mean, that's the biggest question to ask. Why are we doing this? I believe it's one of 2 reasons, okay? Now, the first reason I believe is because they're trying not to even throw more fuel on the flame that is the economy right now. We have seen a lot of damage from inflation results. Of course, we have seen things like the NASDAQ, the Dow Jones, even Bitcoin and crypto, and just about every asset that you can invest in on Robinhood, right, is down quite substantially, okay? And so for that reason, I do believe that if they go into from one bad narrative of inflation to another bad narrative of a recession, that it could possibly overkill the economy past the point in which they expect it to. And I don't think that they want to put us as far down as they possibly can. I think it comes down to maintenance and them trying to just keep us at a level of economic uncertainty that helps battle inflation and battle this big growth that we saw, but not absolutely destroy the economy. If they came out and said, yep, this is the end of the economy for multiple years, this is a recession, we're not sure if we'll be able to get out of this thing, etc., etc., yeah, I think that would just be a little bit overkill. I think we've seen a lot of damage, and that would probably do a little bit too much. Now, the second narrative is that there are still things going on behind the scenes that leads them to believe that this could be different than other times. Sure. Have we seen different than other times in the past? Yeah, I mean, I feel like 2020, 2021, and 2022 has been consumed of, okay, this is a little bit different. And so for that reason, I think that there is a possibility that we do see this be different than usual. One of the biggest things that was quoted by Jerome Powell yesterday in the Fed meeting was what we were seeing from the state of employment, right? You see here that just in July and June, unemployment rates were lower in June in 10 states and in the District of Columbia, which was then higher in 2 states, but overall a net positive. It was stable in 38 states. The U.S. Bureau of Labor Statistics reported today that all 50 states and a district had jobless rates decrease from a year earlier. The national unemployment rate remained at a 3.6%, but was 2.3% points lower than in June 2021. So what we can see is that they're quoting these reports saying that although we are seeing the GDP falling, jobs are still up, unemployment is still down, and overall demand is still at a point of healthiness. And so for that reason, they're not wanting to go forward and saying we are for sure in a recession, because there are other aspects of the foundational establishment of the country that are saying that, very possibly this could be temporary due to inflation, or that we very possibly could just be seeing this be a result of inflation. And once that is under control, which we expect to be soon, then the country can continue on about its way and not enter into a real recession. Whatever the real reason may be, I don't know. But what we can see is that they are not committed to actually putting down this bad news of saying we are in a recession. So how does this affect crypto? What can we expect next? Well, if we look at crypto right now, right? I mean, if we just simply look at Bitcoin, it doesn't really care that much, right? If we go look out, of course, we did see a little bit of a pullback off the news. We go to the 30 minutes. We saw a bit of a dip, a bit of a wick there, but we have recovered pretty much all of it. And I think that this is due to the narrative in which is playing out in crypto right now. And so for that reason, it just simply does seem like crypto's really not all too concerned with this news, but it is something that we definitely need to monitor, because we are starting to run into a little bit of resistance, as we are clearly struggling to continue this move to the upside that we have been on over the last couple hours. Now, I told you guys that I would let you guys know exactly how I'm going about investing during a time like this, where we're getting inflation data and interest rate hikes and GDP data and job reports and missed earnings from big tech and all of these things. And the way I'm doing it is very simple, very boring. It's simply just continuously sticking to my dollar cost averaging plan. Okay. I think right now we're entering into a new phase. I call this a transitionary phase, in which we're going from one narrative to another. I am under the belief that inflation will find a peak, plateau, or start to come down extremely soon, possibly within the next report. As we do know, crude oil prices right now are down below the 100 range. They are in the 90s at this point, which is typically a good sign that oil prices are coming down, which I think will have a direct effect on July's inflation data, very possibly giving us a peak, a plateau, or again, a little bit of a pull to the downside here. And now for that reason, I think that the narrative of the economy is now going to switch from inflation soon, once that starts to get under control, to these recession talks, right? And while we are in a stance in a time where we may very possibly be seeing a switch of narrative that's driving these markets, I don't want to do anything irrational. I don't want to be selling right now just because I don't know how this next narrative is going to affect the market. But similarly, I don't want to be overbuying just because inflation data may start getting good soon, because you never know how this next narrative of recession talk could very possibly start to affect the market in a downward way, or maybe a positive way. So the way I'm doing it is every single week on Wednesday, I'm still buying the same exact things that I've been buying for the last 4 to 5 months to make sure that I am still getting my time in this market, maintaining my positions in this market, adding to those positions, but not going outside of that realm. I'm not diverging away from that strategy, because we have no idea how this next season of narratives is going to affect this market, and I don't want to get caught up in another big capitulation event. If the White House changes their mind, which they very possibly could, and starts throwing the doom and gloom on this market. Okay, so with that, overall, that is the majority of what I wanted to talk about today, is that although we are technically in a recession, the White House and many governmental forces are still trying to hold down that flame as much as possible. They don't want that to be the next big doom and gloom narrative at this given point, but you never know what the true agenda behind that is, and we don't want to get too caught up in it, especially if this is some huge bull trap in the majority of the markets. I'm avoiding that by, again, dollar cost averaging and not doing anything too out of the ordinary until I can at least get a feel for what these next narratives do hold. Now, if you do want to know what these next narratives are, and if you do want to get the research and all of the information that goes into figuring out how this market may react to the rest of the year, all you have to do is just subscribe to the channel and turn on notifications so you don't miss any videos. Now, before we do go ahead and wrap up today's video, I wanted to let you guys know about our sponsor of the day, which is Waves Exchange. Now, this is a crypto company and an exchange that I have talked about multiple times on the channel, because I am a huge fan of the way that they've maintained and still been able to grow even through the times like the Celsius and Voyager and Vault collapse. There's a big thing right now where many people don't think that these exchanges or that these DeFi protocols are going to make it because of what we saw in history. I actually think the opposite. I think that so many different platforms have been able to survive those times and can take those lessons from those companies, apply them to their own company, and pave the way for DeFi into the future. Now, Waves Exchange has been able to do just that, and they have been able to even grow through those times again. Now, we know that they kind of pride themselves on the 4 big factors of their exchange, which are anonymity and privacy, in which you can sign up instantly without having to go through the KYC or the know your customer process. You have control over your funds. Nobody but you can access your crypto, of course, as long as you maintain your privacy. We have transparency always, in which blockchain provides transparency of all operations and smart contracts codes. And then, of course, it is a very decentralized exchange run by the users. Each user can vote on adjusting major parameters such as fees and interest rates to, of course, maintain that governance by the users themselves. Now, the biggest thing about Waves that I do personally like is the different passive income plays that they have. I know people are, again, a little bit suspect about passive income plays. I think that these companies are going to take the lessons learned by Celsius and Voyager, apply them to their company, and be able to figure out how to make this work. I think that every single investment that you can make through the stock market, through real estate, through anything of that nature has passive income opportunities, and crypto is no different. It's just all about doing it right. And what we can see from Waves Exchange is that they are offering many different things in which you can invest in to earn passive income, as high as 350% to down to around 4%, which is much more maintainable in my opinion. Now, what we can see are some of those are liquidity pools. You can get profit by providing liquidity and increase your APY by staking LP tokens. You can invest in something called the Lambo investments, an algorithmic trading strategy with a balanced risk to profit ratio. There's LP staking, in which you can invest in interchain staking based on smart contracts, earn up to 38% on USDN or 21% on USDC. Do understand a lot of these rates do substantially fall over time as these platforms get bigger, but at the moment, these are the rates. There's something like neutrino staking. You can get profit from staking of your neutrino tokens, in which the interest is paid daily of up to 7%. There's Wave staking, which is my personal favorite. You can get rewards by staking Waves to pool owners. Waves will never leave your wallet, and you can get a maintainable 4%, which in my opinion is much more maintainable than like a 350%, right? And then finally, there is the neutrino pools. You can get profit from investing in pools, your stable tokens, in which the interest is paid daily. These are my favorite aspects, and this is my favorite part of the Waves Exchange, that they have taken such a strong approach to different passive income opportunities with different levels of risk to reward. We know that passive income can be risky in times like these, so I like the provision and the providing of different opportunities so that you're not forced to do something that you're not comfortable with. Now, of course, on top of that, they do offer things such as executing trades swiftly and securely, and all of these things have pretty significantly grown and developed even through times like, again, we've seen over the last few months. And so for that reason, I do believe Waves has a lot of potential. They are an exchange that I do personally use. I have been trying out their passive income plays and I'm a fan of them. And if you have as well, definitely leave it in the comment section below for everyone else to know. But with that said, that's going to be about it for today's video. Of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.